Canada unexpectedly added 8,800 jobs in the month of May, but the rate of unemployment hit 7.0%. That's the highest since the pandemic, and if you exclude the pandemic period, it's the highest since the fall of 2016. Let's get some perspective from Beata Caranci, chief economist at Toronto Dominion Bank. Beata, thanks a lot for joining us. How strong is this evidence of a continuing slowdown in the Canadian economy?
This is one of these reports that it could have been worse. It's not an inspiring jobs report, but at this stage in the game, we will take any gains we can possibly get. And one of the positive aspects of this report was, although there was about just over 8,000 jobs created in Canada, they were mostly and exclusively actually in the private sector and in full-time. And those two sides had been suffering in the prior 2 months. The private sector jobs had declined by 75,000 positions in 2 months. We gained back 60,000, so still in a net negative position. But it certainly kept us from thinking that, the economy is going off the cliff at this stage. There's a little bit of positive news in there.
How fast is the labor force growing? We have seen before, of course, the rate of unemployment rise at the same time that jobs are added to the economy. The number of additions was small this time around, but we've seen that trend before. What explains it is that the labor force is getting larger. The number of people in Canada who are working or who want to find work. What are we seeing in terms of labor force growth recently?
It's definitely outstripping what you're seeing on the job front. However, the labor force growth is not what we were experiencing a year ago or 2 years ago, where you would see 70, 80,000 people enter the job market every single month. We're now sitting at around 20 to 30 every month or less. So it looks far more reasonable. We are, at 8,000 jobs. You are going to see the unemployment rate rise because it's just never going to be enough to absorb just the natural influx of the labor force. So the bigger issue is when you look at the trend on the unemployment rate, it's been steadily rising throughout the year, even relative to the Bank of Canada's estimate of where they would like to see the unemployment rate, where it's like neither inflationary or disinflationary. Their range is between 5.5% and 6.5%, and we're sitting at 7%. So it's telling you there's slack building. You do see it in areas in the job market. For example, when you look at wages, they were quite modest in growth, and hours were flat. So we are seeing signs that the employer is not absorbing as much as we would like. So it's not a strong report by any means. It's like I said at the beginning, it just could have been worse. I think myself and many of my peers on the street were braced for a negative print for May. So that's where there's a little bit of relief coming through.
Okay, it's a very difficult job market for young people, students looking for summer work. The age cohort between 15 and 24, the rate of unemployment there was just over 20%. Is that what you would expect with the headline unemployment number rising to 7.0%?
Yeah, that's high. It's high. It's not unusual. We're also seeing very similar experiences in the U.S., even though they have a much better performing job market. So it does look like when you're in this period of uncertainty and you want stability as an employer, you're going to pivot more likely to a workforce that has a little bit more experience than the younger workforce. So, I think that's when you hit slowdowns, temporary workers and students are the first, that younger age cohort, the first that get hit. And so you're seeing that come through in the job market.
How clear was the impact of tariffs and the uncertainty that they have, either the disadvantages, the outright disadvantages, or the perception of more difficult conditions that tariffs have created for many Canadian businesses?
Yeah, you're seeing it definitely in the manufacturing sector. So for 4 months in a row now, we've had the manufacturing sector shed jobs. I think it's about 55,000 job loss. So definitely coming through there. Another area where we're seeing weakness is in the construction sector, and that's related to this housing market slowdown in sales. Although we had a really good month in preliminary data for May, finally had sales pop up in Toronto and Vancouver and Calgary. It's 1 month of data, and we are in effect in a bit of a housing recession with demand, right? Over the past 4 or 5 months, the confidence has just completely been sucked out because of everything going on the geopolitical front. So those two areas, manufacturing and construction, is where you've seen consistent job losses for 4 months, where that trade and geopolitical environment is really, coming home to roost. Outside of that, the areas that are holding up the economy are on the service side of the job market. So the financial sector, the professional sector, health, education, these areas are, continuing to hire, but barely making up for the job losses happening in the goods side.
Do you expect the tariff situation to put further downward pressure on those sectors, manufacturing, transportation, warehousing, in months ahead in 2025?
Yeah, I think the challenge is like we're hearing a little bit of news bubbling up that perhaps there will be a deal between Canada and the U.S. A lot of work happening behind the scenes on trying to resolve the tariff tension. But at the same time, we're still hearing from the U.S. ambassador anyway that there will still be an environment of tariffs placed on Canada. So the end result is this is going to be a sector that's being disrupted. What it had experienced in the last 10 years is gone. There likely will be quotas placed on shipments, a higher costing environment if there's tariffs that linger. We saw steel and aluminum go to 50% this week. So ultimately, this is not positive from a jobs perspective. In the near term, the Prime Minister is trying to rotate the economy to other sectors. We will have to spend a lot more in areas of infrastructure, pipeline development, even in helping those to be carbon neutral through carbon capture utilization facilities that will need to be constructed. So there's a lot of potential for displaced manufacturing in one area of the economy to find a new home in another area, but the timing never matches up, right? So you have the near-term shock of the displacement from trade, and it can take months and more likely years to build out industries in other areas that can reabsorb those jobs. So, and the type of jobs will be very different, and so there may be training involved as well. So in the near term, there is quite a bit of pressure on that sector, and I wouldn't expect it to be alleviated even with a trade deal. I think it helps with the uncertainty, but ultimately this is a sector that is going through a structural change.
Okay, we're out of time, but very quickly, is this the type of jobs report that will encourage the Bank of Canada to consider rate cuts?
I think this buys them a little bit of time. So right now the markets are saying maybe we only get one more rate cut out of them by the end of the year. Prior to that, it was 2 rate cuts. And I think that's because the economy doesn't look like it's going off a cliff. It's just, there's sand in the gears. It's grinding a lot slower. So I think this buys the Bank of Canada time. And so they could probably wait till the fall at this stage.
Beata, thank you so much. As always, Beata Caranci, Chief Economist at TD Bank.